What's going on, guys? Today, we've got a great conversation with Polina Pompliano. In this conversation, we talk about Bitcoin, Jamie Dimon, JP Morgan, inflation, Genius Act, and why I tell a story that is going to blow your mind about an interaction I had with one of the major financial institutions this year that shows you how much opportunity is still left for people in Bitcoin and crypto. This entire story is going to open your eyes to what the big difference is between what you think and what they think. So here's my latest conversation with Polina Pompliano. All right, Polina, what's the first topic?
All right. Bitcoin's price is back up to $105,000 at the time of this recording. And on Monday, JP Morgan CEO Jamie Dimon announced that they will allow clients to purchase Bitcoin. What are we talking about here?
Well, I thought Jamie Dimon actually, the context of how he said it was really important. He said, I don't think that you should smoke, but I'll defend your right to smoke cigarettes. And then he said, I don't think that you should buy Bitcoin, but I'll defend your right to buy Bitcoin. And so this is the escape hatch for Jamie Dimon, JP Morgan, and all of the financial organizations that historically have been anti-Bitcoin.
Do you think he was under pressure to do this?
Well, again, people want to yell and scream and like, oh, this, that, whatever, right? There are definitely some people on Wall Street who lead these organizations who have been very pro-Bitcoin or pro-crypto, and they've leaned in and it seems to have worked for them. But also, they're not JP Morgan. JP Morgan is the largest bank in the world. Their whole thing is risk management, not going out, on that risk curve, doing all, and so like it makes sense. And his clients probably didn't want 5 years ago, 7 years ago, him run around talking about Bitcoin all the time. So it's very rational for him to, hey, how do I do my job? How do I serve my clients, right? So that all makes sense. Now, with that said, that has changed over the last 5 years. Now, most of the clients probably are interested in Bitcoin. BlackRock's got the Bitcoin ETF. Fidelity's got the ETF. I mean, it's game on now. Bitcoin and Wall Street, dapped. Right?
Are there any
the public company, treasury companies, all of this. So I think that's why part of why he's changing his tune, but he can't say I was wrong.
Right. So he said, we're going to allow you to buy it. We're not going to custody it. We're going to put it in statements for clients. And then he also, said that his view remains unchanged, highlighting issues such as money laundering and the lack of clarity surrounding ownership, along with the sex trafficking, the terrorism, etc.
Well, let's take each one of these one by one, right? So the way to kind of escape from the I don't like Bitcoin is exactly, this is a masterclass. He is the best banker of our generation, point blank, period. He's a smart guy. He works very hard. Like people who are yelling and screaming, it's like, this guy's an idiot. Like, no, you're an idiot. He's Jamie Dimon. What he's essentially saying is, I still hold the view that I personally hold, but I understand you have a different view than me. So as my client, I'm going to allow you to do the thing that you want to do within some parameters that I can get comfortable from a risk management standpoint.
Yeah, it's like a parent whose kid wants to take some risks.
So what is the risk management? That they're not going to custody the Bitcoin. I don't know this for sure. My guess is that it probably has a lot to do with the fact that it's a bearer asset. And now all of a sudden there is increased risk for the bank to hold the assets, because what if they ever get hacked? Right? So if they let you buy it, but they don't hold it, that becomes a way to de-risk the kind of entrance into Bitcoin, right? So that's one piece. The second thing is, and this is true of everyone, not just in this context. If you take everything that he said about Bitcoin around sex trafficking, terrorism, blah, 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 whatever, and you just replace the word Bitcoin with dollars, it's more true than if you say it about Bitcoin. More dollars are used more for that stuff than Bitcoin is. And so it kind of gets to this weird place where it's kind of like a politician a little bit, right? You're saying the things that the audience expects you to say, and therefore you're not rocking the boat. Fine, whatever. Just understand the game that's getting played, right? And realize that the big news here is that Jamie Dimon said, I will defend your right to buy Bitcoin, and now he's going to let his clients buy Bitcoin. Everything else around it is wrapping paper.
I just don't want to be wrong.
You don't save the wrapping paper after Christmas Day. You just know what was the gift inside, right? And that's the thing, and that's the decision. So I think that's a big deal. Now, on top of this, I also think that these banks, one of the areas that they have not yet gone in on, which they're going to have to try to figure out, is if you go and try to use some of the financial services, they want a personal financial statement. On those personal financial statements, they look and they say, okay, well, how much cash do you have? How much equities do you have in public markets? What are the private investments you have? What's the crypto you have? What are the houses you have? What are the cars? Like, what are all your assets? And then they go through and they say, oh, private investments, 0. Crypto, zero, right? And they zero out a bunch of stuff that is either hard to value or are things that they feel like are too risky, too volatile or whatever, so they can't rely on them. We're now reaching a point, sure, if you show up and you got fart coin, that's probably going to be a zero in their book. But if you show up and you say, I got Bitcoin, well, if you have Bitcoin as the ETF, they count it because of public equity. But if you have Bitcoin not in the ETF, they're going to start to give people credit for that stuff. And I actually think that if you go and you talk to the private bankers, the financial advisors, they want this. Like their clients own these assets. They're trying to serve their client, right? That's the part that always gets lost in these conversations. These are people who want to do right by their clients. It's just that the bank's got to have these frameworks around risk management, et cetera. And so I think that's going to be a really big unlock is when all of a sudden the banks start to say to people, I will actually acknowledge or include in my analysis whatever the things are that are not in the public markets, that are not cash, et cetera. And I think that that is coming. I don't know how you draw a line. Like, okay, if Bitcoin counts as Ethereum, I don't know. Well, if Ethereum and Bitcoin count as Solana, do you skip one of them? Do you take a view? Do you say there's a centralization filter? Do you just say it's the top 10 coins? Do you say stable coins count, but anything that's not a stable coin doesn't count? These are questions I don't have answers to, but like they're going to have to figure that stuff out for each individual financial institution, how they want to handle it.
And are there any other large banks like JP Morgan that are still holding out on Bitcoin?
Well, I think that each bank has kind of a different level of like capitulation is too strong of a word because I don't ever think that it was like we hate this and we're not going to serve our clients, right? I think that again, go back to Jamie Dimon. I think that he said at one point, like, I'll fire anyone who's trading this. But then he was like, and then my daughter called me and was like, well, I own some, Dad, or something like that, right? And he was kind of like, that's the dichotomy of like, he's learning like what is the younger generation's a difference of opinion than the older generation, all stuff, right? I do know that Brian Monahan, I think is his name, from Bank of America, he's talked about if the regulators will allow them to get into the stablecoin game, they're ready to rock and roll. Like they want to be in the stablecoin game. If you go and you look at just large financial institutions in general, Van Eck, shout out my boys at Van Eck, they have been very much embracing this. BNY Mellon, they're building a lot of stuff, especially around custody, et cetera. But there are some, maybe I could drop a little story for the people out there.
Oh, we love
I am not going to say which organization this is, but let me just give you a sense. We held the Bitcoin Investor Week conference in February. We're not talking about 5 years ago, the story I'm about to tell you. We're talking about literally this year, a year after the Bitcoin ETFs got approved. This is a true story. We reached out to an organization, a very large financial institution, and we said, hey, we're holding this conference. We would love to have somebody come speak. You guys are obviously trying to figure out what to do in this space. How about the person who runs your crypto work or whatever? That person was like, sounds great here. Go talk to the comms people. Go and talk to the communications people. For at least weeks, probably months. I can't remember exactly, but I feel like it was like 2 months, maybe more. They gave us all kinds of hurdles to jump over. Do this, do that, do that. I was like a monkey with tap dance shoes on, just dancing away. Whatever they wanted. Yes, yes, yes. Caroline, who runs our events, she was whatever they need. Bam, 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 whatever. Finally, they come back and they say, we're in. You feel like you just climbed, Mount Everest with no oxygen or something, right? You're like on top of the world. And then they say, I say, well, what would you guys like to talk about? I got some ideas, but I want to make sure this is valuable for you guys. You're going to send your person, but whatever. And they send me a bunch of talking points, and Bitcoin was not mentioned one time. Not one time. So it must have been a mistake, obviously, no big deal. Go right back to them. And I say to them, hey, this is a Bitcoin conference. I get that you guys are doing, tokenization, whatever, but we got to talk about Bitcoin, right? Like we can talk about Bitcoin. And if you want to throw some other stuff in there, I don't love it, but okay, fine. I'm cool with it. But we got to talk about Bitcoin. And I swear on my life, the comms person hit me back with something that was like, so-and-so will not be speaking about Bitcoin. You ever seen a cartoon where like the guy's head just like spins around a million times? That happened to me in real life. And I literally was looking around the room for a hidden camera. Like, am I being punked right now? This financial institution thinks they're going to send somebody to our conference to talk about everything else, but not talk about Bitcoin at the Bitcoin Investor Conference. So I sent back a nice message. Me, I'm a nice guy. Right? Hey, sorry, there must be some miscommunication here. We got to talk about Bitcoin. Comms person sends me back a book. This dude wrote a book in the email of all the things that they were going to talk about, what their strategy, all the stuff. Bitcoin was not in the entire book one time. So I said, take a deep breath, sleep on it, come back the next day. Hey guys, we still got to talk about Bitcoin at the Bitcoin conference. They pulled out. That's how crazy it is. In February of 2025, a large financial institution wanted to come to the Bitcoin investor conference and not talk about Bitcoin.
Well, but is that
is the opportunity. That is where the disruption is going to happen. You think that those people can compete?
Do you think that's just like a regulatory thing?
There was every other financial institution that came was talking about Bitcoin. And they were talking about other stuff too. This is the way I operate. Ready? Here's the deal. If you are operating in good faith, I operate in great faith.
In great faith, not just good faith.
No, great faith. If you're going to come, you're going to take time out of your day. You're going to come to one of our conferences. I'm going to try to do everything in my power to make it valuable for you. I'm going to try to make you look good. Can't help, if you're not handsome, but I'll try. I'm going to make you look smart, right? I'll try to put the lights real nice so people can see, maybe you got a nice watch on or something. It glistens. People, oh, he's wealthy. Maybe I should go give him my money. Like whatever we can do, we are going to do for you at the conference. But if you try to come to one of our conferences and you literally write in an email, we're going to come to the Bitcoin Investor Week conference and we're not going to talk about Bitcoin. Nah, ain't going to fly.
Your watch is not going to glisten in those lights.
So I very nicely, it's true story. Listen, I'm just open book. This is how I just say it how it is. I went back to the guy who runs the crypto stuff because this is a comms person. Comms people, I like comms people, but they could be a little, they could have their own agenda, whatever. And I say to that person, hey, just so you know, here's what the comms person is saying. No response. I said, okay, that's fine. No problem. One day that group, I promise you, one day that group, we're going to take a company public. We're going to be doing a transaction. They're going to want to represent me. They're going to do something. And I saved the emails. I got them screenshotted in a PDF. And I'm going to send it back and I'm going to say, I played a long game. You guys playing, I don't know what game this is, but that's going to come back. So it just goes back to this whole idea of why is that important? They're all in different stages of trying to figure out how to play in the industry. Some of them, like JP Morgan, are saying, we believe X, you believe Y, we are going to help serve our clients and let you do Y. Others are playing, play stupid games, win stupid prizes over here.
Oh, Taylor Swift a little bit.
Taylor Swift did not make that up. Taylor Swift.
That is a Taylor Swift lyric.
I mean, that's a classic Taylor Swift fan thing to say, actually. It's like, oh, Taylor Swift. Taylor Swift. You don't want to go down the Taylor Swift pile.
Win stupid prizes.
She literally stole that. Did she give credit to the person who invented it?
The whole school?
For somebody complaining about stealing her music, she sure didn't give credit for the person who stole that phrase.
I'm sure she just took the phrase, but why? Who said it? Who said it then?
I don't know.
Oh, it's just an idiom.
Yeah, all right, go ahead. What's the next topic? Yeah, y'all didn't know. I got range. I got the financial institutions. I got Swifties. I got it all.
It's been used in Tom Clancy novels from the 1980s and 90s.
So Tom Clancy didn't get credit.
So crypto in DC. Let's talk about what's going on with crypto in DC.
Scooter Braun, Tom Clancy about to be dapped real quick.
Okay, so the Senate advanced a crypto regulation bill on Monday called the Genius Act, which would create, I know what you're thinking. My daughter last night called me a genius and Anthony was like, no, she thinks I'm a genius.
I wasn't actually thinking that at all, but go ahead.
Oh.
forgot about that moment
I was
already.
thinking about it. Okay, so the Senate advanced a crypto regulation bill called the Genius Act, which would create a regulatory framework for stable coins. It was introduced by Senator Bill Hagerty. It began as a bipartisan effort with co-sponsors including Senators Tim Scott, Cynthia Lummis, Kristen Gillibrand, and Angela also Brooks.
The reason why I forgot she said that is it's kind of like a fleeting moment. A 3-year-old says all kinds of stuff every day. You kind of just ignore it all, whatever.
Just go.
But of course you remembered. All right, so
because I'm a genius.
Genius Act. Good idea. Good idea. Now, all the details, whatever, people smarter than me will figure that stuff out.
Explain to me again what exactly a stable coin does.
It's stable.
But what is
It's
it?
a coin that's stable. Name in the name, stable coin. We're real simple people around here.
What?
The whole idea is $1 equals $1, right? And if things are priced in dollars, then you want to say, I got $10 in my pocket. I'm going to walk to the store. When I get to the store, I still got the $10 in my pocket. It can buy whatever goods for $10. Well,
so what do we need a coin for that?
Well, if you have, let's say, Bitcoin or some other coin, you have, let's say, one Bitcoin equals $10. You go to walk to the store. By the time you get there, now one Bitcoin equals $9 or it equals $11. There's volatility in the exchange price to dollars. So what somebody created is a coin that is backed by usually dollars, but you can also do it. There's euros, there's yen, there's yuan, pesos, etc. There's also ones that are backed by gold, blah, blah, whatever. But the whole idea is that it's stable. So now you can use these stable coins to move money around the world, purchase things, etc. The same way a dollar can. You're just upgrading the technology.
I see.
So the way to think about that is dollars used to be physical. Then we went to electronic dollars. How many people walk around with, more than $500 in their pocket? I mean, that alpha for all you young men out there, always carry $100 to $300 of cash. Always carry it with you.
You mean in cash, not just
like there used to be physical cash. Now everything you carry is electronic.
Yeah, so I carry more than $500 in my pocket.
Of course, no, but I'm saying that they upgraded. But I'm saying like physical cash. Always have $100 to like maybe $300 on you. You never know. You might need to tip somebody. You might need to get a taxi. You might need to give it to somebody. You just never know. You just carry cash. It's a nice gentlemanly thing to do. All the older gentlemen that watch this show, they'll be like, he's right, kid's right.
A number of times I'm like, you got $20 for something?
Your wife may ask you for money. You never know. I mean, there's all kinds of stuff.
At the nail salon.
At a nail salon, right? Whatever.
Okay, go on.
So stable coins are stable and they've exploded. They are huge. I think Tether just crossed $150 billion just in Tether. And so then you add in Circle and Athena and all these different stablecoins. They're flying now. And the whole idea is you're selling one of the greatest product market fit products in the world. You're selling US dollars to people who want US dollars. What could be better? You're just doing it in this new technology form factor that the government hasn't created yet. And so you're taking dollars, you've put it in a new wrapper, right? And then you're giving it to people to use.
And it would make cross like international transactions much easier because there's
international, domestic, purchases, money movements, trading, settlement, whatever. It's all better and it's cheaper and it's faster. And so one of the crazy things is it sounds stupid, but how many businesses in the world are like, I got to get to the bank. I got to do the wire by 2 p.m. I got to get to my computer because I got to do it by 5 p.m. Whatever, right? Chill, 24/7. Where we can move money now. We don't have these arbitrary hours of operations. On Saturday, you want to do something, you can't do it. It's crazy. So where the world is going is that we are going to, quote unquote, tokenize all of these assets. Now, again, it doesn't mean that if you take the Amazon stock and you take it from an electronic QSIP to a digital token, it's still the same stock. There's no, in my opinion, there's no real like massive arbitrage opportunity or, money making, whatever. So all the people who are like the tokenization stuff is like quote unquote shitcoin. I just think of it as it's a new technology that has nothing to do with crypto, actually, right? Crypto to me is there's Bitcoin and there's a bunch of these altcoins, all that kind of stuff. But if you simply take the dollars or the stocks or whatever, you put them onto rails that now can trade globally 24/7 with liquidity at all time, like that is valuable to a subset of the population. And so I think that's where the world's going. Stablecoins are just getting us there. Now, what Haggerty said, he was on CNBC earlier this week, I think yesterday, he said that he believes that stablecoin issuers will be the largest holders of US treasuries in the world, more than any foreign country or anything. Stablecoin issuers are going to end up saving the U.S. Treasury market. That's my personal view. Haggerty seems to agree. Says they're going to be the largest holders of U.S. Treasuries in the world. And now, with a little kerfuffle in the Senate, they were all back and forth. Who's going to get the votes? Whatever.
Wait, before that, some members of Congress fear that the bill is a gateway for the Trump family to fiscally benefit. Elizabeth Warren stated a financial meltdown triggered by crypto instability is not some alarmist fever dream. In fact, it nearly happened just a few years ago. Crypto markets abruptly lost $2 trillion, that's trillion with a T, after the collapse of several major firms. In 2022, two of the largest stablecoins failed to maintain their pegs.
So, a couple things. First of all, Today's episode is brought to you by Core. You can earn yield on your Bitcoin by just holding your Bitcoin. It's simple. Core, the leading Bitcoin scaling solution, will reward you for not selling your Bitcoin. It's not magic. Here's how it works. Core is a protocol secured by elected validators. You can help elect validators and secure the network by simply locking up your Bitcoin on the Bitcoin blockchain. No bridging, no lending, and just holding. When your validator secures Core, it earns rewards fueled by network activity and passes them back to you as yield. With a minimum lockup of just 1 day, when the time lock ends, you get your Bitcoin back untouched. Still your keys, still your coins, now your yield. For even higher rates, stake Core alongside your Bitcoin and multiply your yield. And if you want to see what your Bitcoin is securing, join millions of others in exploring the largest Bitcoin DeFi ecosystem. There are over 100 live apps in the network and the deepest liquidity in all of Bitcoin DeFi. Get off zero and start earning yield on even just 1% of your Bitcoin by going to stake.coredao.org/pomp. Again, that's stake.coredao.org/pomp, or go click the link in the description. Today's episode is brought to you by Xapo Bank, where eligible members can unlock the power of Bitcoin without selling it. Need cash fast? With Xapo Bank's Bitcoin-backed loans, you can access 40% of your Bitcoin's value, borrowing as much as $1 million for a full year with low interest rates, zero fees, and no early repayment fees either. Now, here's the best part. You keep your Bitcoin, meaning you get to watch your holdings grow as the price of Bitcoin increases. Whether you're looking to buy a house, fund your child's education, or seize an exciting investment opportunity, these loans give you the flexibility to access cash without selling your Bitcoin. Unlike traditional loans, Xapo Bank's Bitcoin-backed loans have no minimum repayments, no early repayment penalties, and the flexibility to settle your loan in USD or Bitcoin whenever it suits you. It's liquidity entirely on your terms. Xapo understands the unique needs of Bitcoin holders. That's why they have developed a product designed specifically for you. With over a decade of experience in the Bitcoin space, Xapo Bank has been a trusted partner for those looking to make the most of their Bitcoin while keeping it safe. Your Bitcoin stays safe in your vault, untouched, never lent out, and secured in a global network of military-grade bunkers with cutting-edge security technology. Head to zapobank.com/pomp to learn more. That's XAPOBANK.com/pomp. Go check them out at zapobank.com/pomp today.
Crypto markets abruptly lost $2 trillion, that's trillion with a T, after the collapse of several major firms. In 2022, two of the largest stablecoins failed to maintain their pegs.
So, a couple things. First of all, this whole politicalization of this stuff, anyone who's a rational person immediately take all that, throw it out the window, right? There's no place for that stuff, right? If you have a piece of technology, it's like computers. If you're like, oh, I think that this person, if we approve the use of computers, this person may benefit from it. Yeah. Right? Well, no shit. But so will everyone else that uses a computer, right? So just throw all that nonsense out. It's all noise. Then if you go and you look, yes, in 2022, there were crypto firms that failed. But guess what? 3 of the 5 largest bank failures in U.S. history also happened around the same time, within a year of that. And so it was finance in general. It wasn't specific to crypto. It wasn't specific to outside of crypto. There's a whole bunch of factors that occurred, including the Federal Reserve told everyone they were going to keep interest rates suppressed for the foreseeable future, and they jacked them up at the highest rate in history, and a bunch of people got caught off sides from a risk management standpoint. So if you look at that, you say, okay, throw that argument out for a second. Stablecoins are stable. There are people who have tried to do algorithmic stablecoins and all this other stuff. I personally believe that US-backed stablecoins, US dollar-backed stablecoins, that is going to be the product that wins. It is winning now. I think it'll continue to win. I think that Tether, there's plenty of people who are yelling and screaming about Tether. They think it's controversial. They think this, blah, 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 whatever. What I know is that Tether has done probably more work than almost any other private company in the world at extending the dollar adoption and the dollar hegemony globally. They are getting this in the hands of people. I think they have something like over 400 million users, and they're adding some crazy, 30 million users a quarter or something. They have $150 billion of stablecoins issued out there. It's insane how big this thing is. And now, a little alpha for everyone.
So much alpha in this episode.
The Tether guys, they were based outside the United States. They weren't coming to the United States. They weren't trying to get adoption in the United States. None of that stuff. That allowed the opportunity for Circle and other stablecoin providers to very quickly jump and grab adoption in the US. That is changing. Tether You see the CEO. Paulo is coming to the United States multiple times. They are engaged on this now. If I was operating a business, if I was a crypto exchange, if I was a stablecoin issuer, if I was running a consumer product, anything, the last person in the world that I would want to compete with is Tether, because their balance sheet is the biggest. And if you've got the biggest balance sheet and you have a track record of execution in the way that they do, that's a nightmare to compete against. And so I think that the stablecoin thing, there will be other stablecoins that come up. We already see that Circle has done a great job growing market share. We've seen others, et cetera. But Tether, man, those guys I would not want to compete with. And so I think that that's just what you're seeing now is people are saying, all right, well, let's get some rules of the road. Let's get some regulation in here on the stablecoins.
Which is a good sign, right?
Yeah, and look, plenty of people will say, oh, well, we don't need regulation for the dollar. It's like, why do we need it? Whether you think we need it, we don't need it, whatever. All I see in all of these developments,
at least the conversations are happening.
The incumbents are embracing the new technology. Are the rules going to be perfect? No. Are there going to be things that we wish we got? Yes. Are there going to be things that they get wrong? Of course, right? Whatever. All I know is that 5 years ago, if you were in this industry, and you talked to, you had a boyfriend or a girlfriend, you went over to the parents' house and they were like, I think that this person may be involved in bad things. How do I know that? Because her dad did that to me. But that was like a real thing. It was like, oh, like, why are they playing in this industry? I thought that industry was bad, whatever. Now, it's completely changed.
Yeah.
Right. And so I think it's going to continue to change. And the only thing that I can continue to tell people is there's going to be no difference between traditional finance and crypto. It's all merging. Robinhood is a traditional brokerage exchange. They are adding very quickly a lot of their growth coming from crypto. Kraken is a private crypto exchange. They are adding US equities. All exchanges are going to offer stocks and crypto assets. Same thing is going to happen with the payment providers. Same thing is going to happen with all these different products.
Yeah, I was just going to tell a little story for the people. When Anthony came to meet my dad, I was already in Atlanta, like at my dad's house for the weekend, and I hadn't told him anything about what Anthony does for work. But this was 2017? And what happened? And the night before Anthony came, my dad was telling me how he saw on the news this new thing, this Bitcoin, and how all these like Silk Road, he was telling me, and these drug dealers and this like bad stuff. He was like, yeah, so many things out there now. And I'm like, oh my God. And then Anthony comes the next day and I'm like the comms person at the financial institution. I'm like, listen, you do not talk about Bitcoin. You do not talk about cryptocurrency.
You know what I did? I said, Ivo, you lived in Bulgaria. You know what hyperinflation is? Let me explain Bitcoin. And I explained it to him. By the end, he goes, this is a very interesting idea. He goes, how do I buy some of this?
Yeah. And then that Christmas, my dad, we had like a Christmas party and all his friends were there. And I walk in and I see him pulling up a video of Anthony explaining Bitcoin to tell all of the Bulgarians about the value of Bitcoin. I was like, he is orange pilling everybody.
Your dad's got more Bulgarians on the orange coin than I did. All right, what else?
Okay. So Moody's announced a downgrade of U.S. debt, sending treasury markets higher on Monday. The 30-year note yield is above 5%, and the 10-year note yield is up another 11 bips.
Beeps. Damn, I should drop that one day. Just be like, yeah, and then the treasury rate went up 3 beeps.
I have no idea what I just read. What does this even mean?
Bips?
All of it. Why do we care about the note?
Moody's. Nobody.
Oh, Moody's is... No, I know what Moody's is, but...
All right, so let's just rewind
why
for a
are we
second.
downgrading the U.S. debt?
The Moody's thing doesn't matter at all. The Moody's thing is like again, if you remember NBER, you remember me ranting 3 years ago about NBER? NBER is a group that they claim that they have a monopoly on determining whether there's a recession or not.
Beeps.
It's a made up nonprofit. They just made it up, and all of a sudden they say, well, we get to decide if it's a recession or not. Like, no, you don't. No, you don't. We don't have to listen to you. It's just made up. It's just like one of those false, inventions in economics that people all of a sudden, they just wake up one day and they're like, why do we have to listen to NBER? Isn't it just 2 straight quarters of negative GDP? That's a recession. That happened. Why do they get to say it's not a recession? It makes no sense. NBER, fake nonprofit. So if you go and you take a look at Moody's, why do they get to say what the ratings are? Well, why do they got to say what the ratings are?
I don't know.
Again, it goes back to it's directionally helpful, right? Obviously, they're like sounding an alarm, like, hey guys, this ain't going so hot, right? So like that is valuable. But in terms of like what's the difference between AAA or AA or this, like it's all just made up. We just made up frameworks, we did all this stuff, whatever. The thing that we should be paying attention to is government spending. And right now, there's a bill that has been proposed. I don't like it. There's a lot of government spending in there. So all you people who think that I just like some blind political Luddite or whatever crazy things you guys say in the comments, here you go. Roll the tape roll.
What do you not like?
They are exploding the national debt.
But Scott Besson's out here saying that he is determined to bring spending down and grow the economy.
He's trying to do that, and the politicians are working against him. He's Treasury Secretary. He, at the end of the day, he doesn't have control over that, but he's doing the best that he can. He's using economic policies, and we've seen that. We've actually seen in certain areas contractions. We've seen them get rid of with Doge, etc. They're trying.
So what are they trying to spend on?
Trust me, if we go read the bill, I'm sure there's all kinds of crazy stuff in the bill. If y'all remember when I read the infrastructure bill.
I do remember that.
And I found out that they were trying to get money to have people test driving high on marijuana. And I reminded everyone that we have plenty of people in the audience who will do it for free. It's just save the government like $50 million. They were trying to study exotic plants and the impact of them by building highways. I mean, just crazy stuff. They also were throwing $1 billion to a nonprofit of the spouse of one of the politicians, right? I'm crazy stuff. And so every bill has crazy stuff in it. I've actually changed my mind on the whole pork thing, right? Pork is this idea that when you have a bill, if there's pork in there, it's basically a negotiating thing.
I hate that word.
I'll allow you to get X in the bill if you give me this other thing. It's like almost like horse trading or whatever. I used to be very, very against it. I think that although I am still against it in theory, I understand how it like gets these bills done and is like a more kind of like in practice. Still don't like it, but at least I've changed my mind. And I understand why they do it. And so if you look at this bill, it explodes spending. And so guess what? Tale as old as time. Democrats, they spend money. Republicans, they spend money. The national debt goes up under every single president that we've had, regardless of political pile.
Who's ever in charge spends money.
And so I don't like that. I think that we should have a political party that stands in there and says, we are not spending more money. We're not doing it. And so I don't care how much you yell and scream. I don't care how mad you get. I don't care about that, but whatever. We're not spending more money. We're balancing the budget. But it doesn't look like we're going to get there. And so I think that is a big part of this is the Moody's downgrade it's downgrading our debt. Now, I don't think that there's a lot of people who were going to buy the debt that now aren't going to buy the debt because of Moody's. I think there's a lot of people who already weren't going to buy the debt because they were like, hey, I don't know if that's a great trade. And so I continue to yell from the rooftop, bonds are not a good allocation strategy. They, like your cash, are pretty much guaranteed to lose money. And so, especially over a long period of time. And so there's a lot of people who think that they are hiding in these safe assets, but go look at TLT. TLT is, I think it's the iShares like 20-year treasury fund or something. Down and to the right. That is the story. That should be their tagline. TLT, we go down and to the right. And so when you look at that, you say to yourself, like, look at it right now. Type in TLT stock on the Google machine and see what is the 5-year return of TLT. I bet you it's down some enormous number.
It's down 48% in the last 5 years.
It's down 50% in 5 years. And people are like, I'm safe. I'm hiding in bonds. No,
wow,
you're not.
That's crazy.
You're getting whacked. And so it goes back to this whole idea of they have to print money. They're going to devalue the dollar, and the bonds are going to get crushed. What all time?
All time, it's up 3.5%.
Stop. How far does it go back?
Well, it only goes back to 2002, July.
Okay, so 2002. So that means in 24 years, it's gone up 3%.
3.5.
Okay. On a real basis, you're down a gazillion, right? Like you're just taking L's every day. And so it goes back to this whole idea of over a long period of time, holding bonds is not a good strategy. I understand why people do it. I understand what the old 60-40 portfolio, the whole point of it. I get all of it. It's just moving forward. The world has changed. And you've got to look at the world differently. And so that means that you cannot hold bonds the way that you used to hold bonds because they are a guaranteed way to lose money. And so I don't care what else you go by. I don't care if you go into equities. I don't care if you go into real estate, if you go into precious metals, you go into Bitcoin, whatever. I'm not here to judge people. I'm not here to give advice, any of that stuff. I just know that bonds are a losing strategy. And now the world is realizing that holding that debt may not be the best idea.
Great.
All right. You got anything else?
I don't.
Amazing. Anyone who's watching this, go and check out CFOsilvia.com. It's a new product we just launched. Thank you so much for making it here to the end. It's my gift to you. It's completely free to use. It's an AI CFO in your pocket. What you do is you hook up your brokerage account, your cash account, your crypto account, your credit cards, everything. You put all of it in there. It's encrypted. It's anonymized, so the team can't see whose data it is. It's encrypted so that if it gets hacked or anything, no one can get anything, all this stuff. And then we got these AI models that got laid on top of it, and you can do all kinds of things. You can chat with your data. You can email it. You can call on the phone. It can start to tell you things. You could ask things like, how much cash do I have? What is my debt to equity ratio? How are the recent China trade negotiations going to impact my stock portfolio? What do you think about X stock? I even went and I asked things like, what are 3 stocks that I should consider looking at if I want to have asymmetric upside, but limited downside over the next 10 years? Gave me some ideas. I went and I researched those things. All kinds of cool things that you can do if you go use CFO Silvia, CFOsilvia.com. I would appreciate it if you looked at it and then send me feedback. We're trying to make it better. That's it for today. See you guys next week.